Hello and good afternoon. I welcome you to today's Trading Spotlight webinar. Today, it's the 9th of July, 2021, and I have a very interesting topic today for you. So we are talking about the difference between a trading plan and a trading strategy, what it means to define a trading plan, and then also formulate a trading strategy. By the way, at the end of this webinar, you will also get some insights into a profitable basic gold strategy, in fact, where we will use our acquired knowledge then to, how can I say that? Let it shine in the real world. So stay till the end of the webinar, and you will get some insights into a basic profitable trading strategy in gold. If you watch this on YouTube, the recording, the event will be recorded, and we will upload this on YouTube. If you watch this now afterwards, then if you have any questions, please feel free to comment in the section below, respectively. If you like the webinar, leave a thumb up here, subscribe to the YouTube channel, set a reminder for not missing, so that you do not miss any of the future webinars that we are producing here for you. And so that's it in regards to the introduction. For all those of you right now here in the live event, in the Zoom event, by the way, if you want to ask the questions in real time, also and all the people watching this now on YouTube, go over to admirals.com, and there under the educations and webinars tab, there you have the chance then to register for this free webinar here, so that you can witness it and join it here in real time and ask a question in real time. So all of you now here in the webinar, please feel free to ask your questions. I'd be happy to answer them. And what I now want to do is I want to share my screen and then taking it from there. So today we want to have a look here at this topic, as that's this webinar, defining a trading plan and formulating a trading strategy. And it's very interesting that there's a difference. You will see that. Before we start, first of all, I'd like to go again here through the current rebranding taking place at Admirals. Admirals is already established in the FX and CFD world, and known as a, let's say, world-leading CFD and FX broker. Here in Germany, we refer to Admirals as the DAX expert, in fact, offering the most competitive offering when it comes to DAX CFD trading. The same is also true once you have a look at the FX offering, for example. If you check out here the quotes, the spreads, the trading conditions in general, the cost of doing business, then you will find out that it's very tough to find someone who's better than Admirals in this space. So but now they decided to say, hey, we are already established as an FX and CFD broker in this context, but we'd like to go the next step and broaden our service provision in this context, and not just be a true multi-asset broker where you have the chance via the invest solution, for example, to invest in physical stocks, but also offer other financial service products, like, for example, in this context, a credit card. So if you're opening an account, you have the chance to apply for a credit card and thus use your trading gains. If you make money trading the markets, then you can transfer it to your credit card and directly go shopping, wherever that might be. So there's further plans in the future to extend here this financial service provision. That's the first step being made. And due to this development right now, Admiral Markets is now turning into Admirals. So it's the same company, but with another face, logo in this case, in the context, to be recognized as a financial service provider. And so that's just around here, the introduction. We want to have a look here at today's agenda and what we want to look at today in today's webinar. So today's agenda is around the definition of a trading plan, formulating a trading strategy, our strategy bulletin. I did it. It's ours because I think you would probably take it in the future and build your trading strategy around these bullet points yourself. In fact, I could have also wrote down here my trading strategy bulletin. So something I also went through here in Germany. So it's not an English book, but in Germany, I've also published a book. A big book publisher came to me and asked me whether I'd be interested in publishing a second book, by the way. So the first one was quite successful. It was on Forex trading. And the second one, then I decided to write something about building a strategy. And this bulletin here, I went through to make it 100% authentic, in fact. I went through these bullet points with the target to build a trading strategy. So this second book, it's called Trader. It's around building a profitable trading strategy and independently from the markets you trade. So it might be equities, it might be indices, it might be commodities, it might be FX, it might be bonds, it might be Bitcoin, crypto. It all comes down to certain aspects you have to look at and you have to cover once you decide to formulate a profitable trading strategy and trade it then also. And this bulletin is what we will go through here. And at the end, as I already promised, a profitable trading strategy for your trading. It's gold. It's a gold strategy, but it's also possible then to use the strategy bulletin from earlier and build your own strategy in FX, equities, indices, whatever your favorite market might be. So let's first of all start out now here with the definition of a trading plan. So the main difference between an amateur trader and a professional is, in fact, that a professional follows a trading plan. It's not just that he has a strategy, which is a subset of a trading plan, but he is here following a trading plan. If you want a routine, a daily routine, a checklist he goes through every day when it comes to trading the markets and then taking it from there, which is, by the way, very funny because as you may have witnessed in the latest webinars we did together here, if it was on a Wednesday or it was on a Friday, it didn't really matter. I had to interrupt the webinars for some seconds here to collect some numbers I need to prepare my trading day. So once we finish here the webinar, and even though I'm not 100% focused on the market opening of US equities, then in around 20 minutes from now, I'm still trading the markets, and I have a stock on my radar here. It's Virgin Galactic, so probably you've heard about the company. Richard Branson, and it's SPCE in this context. It's the ticker symbol. And earlier this month, we saw. Was it earlier this month or was it into the end of last month? I'm not really sure. We saw a nearly parabolic rise higher because now, since we obviously do not have any other problems, market participants are right now speculating on who's the first billionaire in space. So Virgin Galactic in this context is looking to offer tourism from call it retail guys, so space tourism to people who want to go to Mars, let's say, or not Mars, but go into space at least. And so there have been now some developments around Jeff Bezos. So probably I've heard about this funny story that there's a petition. I'm not really sure. Oh, by the way, I'm sorry. Let me just take this out here. So there's a small mistake in the presentation I just saw. Let me just sort things out here. That's funny. Why is that? Okay. So people are saying, well, if Jeff Bezos, the founder of Amazon, if he goes to space, we don't want him to come back. So that's the funny story around this. So there was some games being played around. But let's come back to trading. So this is the stock from Richard Branson. Then the stock went vertical after the company Virgin Galactic announced that in this context here, Branson might be earlier in space than Jeff Bezos, and which is something which could have been expected due to some earlier developments that was already in May, if I'm not mistaken, or at least it was then in June, some 2 weeks, 1 week before this tweet was done by Virgin Galactic here, that the company got the approval from the FAA to continue to build their business in this area and offer space tourism. So why do I mention all this? Because it's a potential fake a move, which we have seen as 1 week earlier. And so knowing this and the current developments there led me to analyze the stock already before I started the webinar here in my daily preparation, 1.5 hours before US markets open, and then write down certain aspects and see whether the stock is potentially hot and if it's tradable for me based on my personal filters I set for myself in this context. So I go through, and that's why I mention all this right now. I go through this every day over and over again. But as you can see here, this is the second bullet point. This trading plan, this routine is not a trading system, or it's not a strategy I follow here, but it's just the key parameters based on which I then look, is this a tradable stock for me? And wait, let me just check here. Okay, everything fine. Okay. If it's tradable for me, and then based on these input parameters, I'll then go here one step further, have my strategy based on these technical key parameters, and formulate a plan how to trade the stock then based on a proven profitable strategy in this context. So this is what I go through, but the trading plan, the routine I follow here has nothing to do with the strategy itself. The strategy is part of this overall plan. And let me just check here. Yeah, okay, that's another question. So that's another question. You probably remember in terms of renewable energy, the webinar we did together. So there's a mentioning here in the chat box, space tourism is criminal in the face of CO2 pollution. That might be the case. I hope that you're not angry with me if I say I still trade the stock based on the current developments I see in price. So my main intention is to short it. Probably that makes you smile now because I don't think that this is a sustainable move on the upside. I didn't see it as a sustainable move last week, and I don't see the squeeze higher now being initiated from this Reddit trading army to be sustainable on the upside. But however we put it, at the end of the day, it comes down here to a trading plan and following a routine. And having this routine is crucial in part, or as part of your trading plan, in fact, is crucial for the overall long-term success in your trading. If you don't have this, if you just jump into the action, if you just look at the chart and say, oh, that looks great, that looks promising, I'll go long here or I go short, that's not going to cut it. That's, well, longer term, if it takes longer, then let's define longer, probably some weeks, probably some months. But there's this famous 90-90-90 rule that 90% of the people lose 90% of the money in 90 days. Well, main reason for that is, in fact, because people, retail traders especially, don't follow a plan, don't follow a routine, don't know why they trade what they trade. And this being said is something to take into account here, and is that's the main difference between the pro and the amateur trader in this context. So the differentiation trading system describes how you will enter and exit a trade. So it's the pure trade logic. That's if this happens, then this. So if we, let's say, push, in case of space, for example, right into the open, push up to 54 and roll over there, I'd go, if there is a clear sign of a, let's say, held offer on the tape, let's say, I enter the stock with the first position. If it then drops back below volume weighted average price, VWAP, I add here. If it consolidates below, and then taking it from there, target is there and there. My stop will be defined by the overall price action. Most likely will be a max of something like 20% of the ATR, something like that, to put it directly into the today's price action. And then taking it from there. So the risk reward is very favorable. It's likely that if we see such a push higher still, that we get to see another attempt to break down to 50, probably even lower than that. And that produces a great risk reward rate in this context. If that doesn't manifest, if it doesn't play out, we see the push to 54, but then the offer is taken out and we push above and we stabilize above 54, short is not an option anymore. So it's not just that I say, okay, I do this if I'm short, but I also know when my trade is wrong and then I exit. So this is the system I follow. It's clear rules in terms of entry and exit in this context. And it's also defining here the trading system, how my risk and money management looks like. So that means I already know in this context what I'm willing to risk on such a trade. So let's say I define for myself a daily stop. The daily stop, let's put a number out, might be 100 euros. So I'm willing to risk 100 euros of my trading capital in this context for such a trade idea. And let's say now that my risk is, let's say, 25 cents. That's a very easy way to put it. Well, then I need to then the next step define, okay, it's 25 cents. That means if I'm trading 400 shares, for example, on the short side, that's probably meaning then that I risk 100 euros. But wait, do you really want to wait? Do you really want to risk 100% of your daily stop on this one trade idea? So you're done for the day. So that's part of your overall plan. It's not just the trading system itself, how much you risk here, but the plan. If it says you have 100 euros and after that you're done for the day and you have to shut down the computer and go into the weekend, then the question arises, oh, do I really want to risk 100% of my daily stop on this idea? Or probably my idea is right, but I have no chance to re-enter if the price does not behave as expected, but slightly different. I'm getting stopped out on my first attempt, but then I get a chance for re-entry and still see that my idea plays out. Probably it makes sense to say, okay, I'll give them 3-4 times a chance. So that means then that I have to cut down my initial position size and not just cut down the position size, but also what's the word for this? Divide my daily risk here into, let's say, 4 chunks. 4 chunks. So 100 divided by 4 is 25. 25 euros per trade. That means if I'm risking now 25 cents on the trade, I can trade with each attempt 100 euros. I'm sorry, 100 stocks, 100 shares. Sorry, 100 shares. And taking it from there. So you can see that this is part of my plan, but still it's not defining. It's telling me how much shares do I plan to trade if this plays out as I expect. How do I enter the market? But this is all which is written down in the trading system. It's the logic in this context. My trading follows. The trading plan is more than that. The trading plan, for example, says I'm willing to risk 100 euros on each day I trade. Why do I do this? Well, because my mental stability is given if I lose 100 euros. It's nothing I'm happy about, but if I don't feel comfortable losing 100 euros, probably I should scale down here, which then directly affects the position size I take within my trading system. But the trading plan here, it not just tells me what I have to do, why, when, and how, but this is not just in terms of trading, but also in terms of my daily routine, as I already said. So the steps I went through and I go through here in real time during the webinars in the past, and I will go through once again today. So in 7 minutes, 5 minutes before the opening, I will collect the last numbers I need here for my file. I collect the data in, and then I use this in the aftermath of the trade. If I take a trade, that's the next thing. So probably it doesn't play out. Just imagine we push above, in this context, above 54. Well, I'm not taking a trade because the rollover does not take place. Probably I don't even take a trade. I don't need to take it against 54 and getting stopped out. Probably the price action is just not showing me that there's any kind of weakness. There's no such thing as held offer, which is then taken out, some kind of spoofing, whatever it happens, but it just pushes higher. Okay, then I'm not taking the trade at all. But the thing is that here in this context, I still have to look at clear statistics each time I take the trade based on the same strategy. And this is something which is bringing me into a position where I can perform each day anew here at the highest possible level, not just from a trading perspective itself and knowing what I'm doing all the time, but also staying mentally stable in this context and being not serious. What's the other word for this? In Germany, we call this sovereign. Yeah, it's some kind of sovereignty. I'm talking about here, and So what you can see in the last bullet point, a clearly and solid formulated trading plan gives you a routine which you follow without hesitation. And this is where the edge comes from. You try to, which you try to capitalize over and over again to gain an edge and see a rise in equity curve over time. And so that's it around the trading plan. So the trading plan, as pointed out here, is not just how you enter the market and exit the market. This is in fact the trading system or the logic you follow, but the trading plan is like what you do, how you do it, and this is way beyond when it comes to trading, but it's more than also which time is a trigger event, which then has a certain action I take, like starting to collect data from 2 p.m. German time onwards with 1.5 hours till the US markets open, for example, and looking at clear numbers I know, which brings certain asset classes, / in my case, especially US stocks, into play or make them hot and then taking it from there. So now let's move here over to formulating a trading strategy. And the following steps here cover answering the following questions first. So first of all, I should think about what I want to trade and how I want to trade it. So what do I mean? What do I want to trade? For example, from a risk perspective, it makes a big difference if you plan to trade stocks, US stocks, German stocks, European stocks, whatever, or if you plan to trade FX. Why is that? Or where is the difference mainly coming from? In case of FX trading, you have a 24-hour market, which is running 5 days a week from late Sunday till Friday. Then there's one interruption on Saturday, probably over Sunday, and then trading resumes late Sunday. In case of equities, if you trade stocks, for example, you have preset trading hours. In case of trading spot here in this context, you have 3:30 in case of US stocks, 3:30 German time, 2:30 London, and 9:30 London when, 9 London when markets close, and that's it. Then between 20:01 till 3 or 2:29, there's no trading taking place. You can see what futures do during that time span and how they move and in which direction your stock you're holding overnight here will likely open. But I mean, certainly you have a chance to check numbers like after hours and pre-market quotes here and where trading is taking place. But if you, for example, trade here stocks with Admirals via CFD, and this is the case with every other broker out there too, not offering overnight trading, let's call this in case of equities. Well, you have to wait, and then there's a gap. This gap means nothing more. You have a risk that the market will open against you with a difference, in fact, to the former closing price, resulting in an risk you probably don't want to take, because you say, I'm not such a risk taker guy, probably because of experiences you made in the past. Let's say Fukushima in 2011, the DAX gapped down 1,000 points on that day. Brexit, the same thing. Case of the DAX, 1,000 point down gap. If you're on the wrong side here and there was no trading taking place overnight, which wasn't the case back then, well, you probably lost a lot of money. That does something with you. So it's not that you stay calm and that you can easily and sleep well if you witnessed such a development in the past, which means, like, do I really want to trade an approach where I focus here on stocks, holding them overnight, or probably do I really want to trade, or probably I want to trade FX instead, because there's a 24-hour market, there's always liquidity, and there's always a good chance to come out of the market at a, from my end, favored price. The next question is on how I want to trade here in this context, by the way. And now this is the time I have to just check my stats again and then come back to you. Oh, I'm sorry. Oh, that's the wrong one. That's the wrong one. So this is, by the way, a site where you can see here that Swaggy Stocks, it's for free, where you can see that space today is heavily discussed here among the Wall Street bets guys and the Reddit trading army. So you can check here these numbers. Baba is the second. This is the company from Jack Ma, Alibaba. But here, space. You can see that is by far the most discussed stock. That's one of the reasons why I also have it on my agenda for today. But I wanted to open here another tab. 1 second, please. So, okay. So what I'm now looking at is, in fact, on how many shares were traded pre-market, and this is right now 1.9 million, which is bringing the stock in my on my radar, because on average 70 million stocks are traded, but it's not that much as it was used as we saw, for example, some weeks ago. So it's not that much action, which is kind of interesting, because now it brings up the question whether the moves will be so aggressive or not. But let's come back here to the to today's topic now. So then also the question is how I want to trade this. So this is, for example, something which needs to fit my personality, let's say. So what do I mean? Well, if I'm an impatient guy, let's say, I want to get a feedback very quickly. I don't have the patience to wait until a trend materializes. If I'm not that kind of guy, then it's unlikely that I'll be successful, or let's say overly successful, with an approach where I hold positions for several days. So sometimes that might make sense, but it needs another mindset you need to establish, which brings us already down to the question on the third bullet point. In fact, let's just open it here. Who am I? So if I don't know myself, if I don't know if I'm a patient guy, impatient guy, and what are my cognitive strengths and all that, it will be very difficult to spot on how I want to trade and what I want to trade, not just in terms of the market, or in this case, the asset class I focus on, but also on the question, do I want to trade the trend? Do I want to trade the progressive move, momentum? Do I want to scalp? Do I want to trade news, breaking news trades, and all that? So there's lots of different approaches, which can all be profitable if traded the right way. But to make long things short, still, you need to know your first. You need to know yourself first, and know what you're looking for, what your strengths, cognitive strengths are, and then build it from there. So this is one of the main questions, which is most of the time ignored based on my personal experience from people just saying, hey, is it really that difficult to buy low and sell high? Well, depends. Let's say if you have a good read on the market, that might sometimes be easier for one guy than for the other. But if you want to be consistently profitable in your trading, it all comes down to your self-awareness and your knowledge about yourself and where your strengths are. And this is a question many people just do not want to answer for themselves for whatever reason. But thinking about yourself, your strengths, your weaknesses is something which makes people feel uncomfortable, even when it's only them sitting in their bed and thinking about themselves. It's like it's something making us feeling uncomfortable. It's not unusual, in fact, but still, this is where profitability in trading, long-term profitability, starts. Also here, the second bullet point, it's focus on one asset. This is very, very interesting, because yesterday I received a newsletter. It's from James Clear. You probably have heard about him. He's the author of the book Atomic Habits, which is a book I highly recommend, in fact. And what he wrote down within this, there's three wisdoms, we can call this. It's just great. It's probably the best newsletter out there. Let me just see here. So there's his third wisdom. Yesterday, I read the following. It was 3 steps to exceptional results. And the first point was do less, stop dividing your attention. So this is James Clear's take on how to make it to exceptionality. In our case, exceptional results in the world of trading. So do less, stop dividing your attention. Why does this matter in terms of the point here, focus on one asset? If I focus on 2 assets, I'm dividing my attention. That doesn't mean that I don't have 1, 2, 3 stocks a day or asset classes on my radar. But still, it means especially for a beginner, it needs time to get there, to focus on more than one asset, in fact. And so the first step is to really focus on one asset. So, or on one market, which you then try to trade the best way you can to become the best trader you are within this asset class with your approach, and then build everything based on your experiences from there. And this is this is the main reason, in fact, why I also say focus on one asset first, because based on my personal experience, people are getting really distracted and trade way too much without really focusing on their strengths, respectively, on what works for them and what doesn't, in fact, and want to trade everywhere because they think they do not get enough trading opportunities. There are plenty of every day, and they will come over and over again. It just needs time, patience, and your focus here on quality trades, in fact, and focus here on what works for you and what doesn't. So by the way, timeframes. Which time frame do I plan to trade? That highly depends on my personal style of living, let's say. So let's say I'm a student, for example, I'm in university and I have to go to university each morning, let's say, or let's say each second day, whatever. Can I really focus on trading, scalping the, let's say, market opening in the DAX each morning at around 9 a.m. German time, 8 a.m. London? Can I really do that? Is it likely that I can continuously focus here on trading the market with one strategy I really want to master? I don't think that's the case. This is also true for someone who has a classic 9-to-5 job here, working as an employee, and still want to look for a second source of income in this context, which means if you're trading, or what you plan to trade does not fit your overall living style, don't make the mistake to let your life don't let your trading say how you have to live your life, because this is not going to work. It should be the other way around. You look at who I am, where are my responsibilities? This is also true when it comes to family questions and all that. Where are my responsibilities? And then you try to find ways in your trading, markets, and so on and so forth, which fit this picture, your living style in general, and then taking it from there. So which means, like, if I'm full-time employed and I have to take care of the kids at least twice a week because my wife has her duties wherever that might be, probably my focus shouldn't be on a 5-minute chart, but in fact on a H4 probably daily chart I look at in this context. This is how you can understand that question. Then the next question, what do I want to trade? So what do I want to trade is, in fact, already something I mentioned earlier here. It's not just the asset class I plan to trade, and if it's equities or if it's FX and so on and so forth, but also what do I want to trade in terms of what's my style of trading. So if you look at it from a price action perspective, for example, it's like, do I want to trend follow? Do I want to trade momentum, progressions? Do I want to trade regressions, mean reversion, whatever? That's the next question here you have to answer. And then also, what is my advantage? So where is your advantage? What is it? It could be that it's something you can't really quantify, or at least you should try it. But how can you quantify, let's say, that you're not as loss averse as the most human beings are, so that you cut your winning trades short and let your losing trades run, so that you're fine with letting your winning trades run in this context and cutting your loser short. So this is something you can rather sooner or later then see developing out of your trading results, which you have to document. But still, this is an edge which is initially, at least, very difficult to quantify. It's the same is true when you have a very organized agenda you follow, as I did, for example. This is one key reason I have an edge, because if I end this webinar now in around 10-15 minutes and then switch over to the trading platform, I know I have everything prepared. I have everything set. All I need to do is I have to look at the chart. I mean, I have it open here on my right and see where the market opened, how it behaved. And then based on my clearly predefined rules, respectively, not just rules, but the game plan itself and the picture I visualized already, I can jump right into the action. It's not that I just wait to jump into the action and click the mouse, but I feel comfortable right from the start. And this is something giving me an edge compared to many others out there, just jumping into the action and just clicking around and playing some, I don't know, Counter-Strike in charts, and then just trying to hit some move up or some move down. This is also an edge. And this is something you have to know about yourself. That's one other reason why you have to write down and answer all these questions for you here in this context. What is my advantage? Where does my edge come from, in fact? So let's now here go through this trading strategy bulletin, in fact, and then answer. It's 7 questions, in fact, you have to answer. And the interesting thing now is, I mean, I had some mentees in the past who went through this, and they answered these questions within 10 minutes or so. I looked at them and said, no, you didn't get it. It wasn't about to be as fast as possible, but really to think about the answers in depth and also discuss it with people who know you well. I mean, which is sometimes your partner or whatever, asking, what do you think about this? And really discussing that, sitting down for hours, sometimes discussing that, writing it down. And this takes time, in fact. So don't don't go through this within 10 minutes. This is not going to cut it. That's not going to work. The same is especially true when it comes to writing down your trading psychological what's the word for this? Trading psychological profile. If you answer questions which directly affect you, respectively, where you think that this behavior pattern of you will affect your trading, it's nothing you write down within a minute and then it's done from there. But you have to write it down, formulate it. How does it show itself? What do you plan to do about it, to not being a victim here to this, let's say, mental tripping hazards? So this is definitely something to keep in mind. So first question, which market do you plan to trade? So in this context, you answer the question according to your personal preferences. Do I want to trade shares? Do I want to trade indices? Do I want to trade commodities? Do I want to trade FX? Do I want to trade bonds? Do I want to trade crypto? It's not included here. So this is something you have to answer first. So what is the market you want to really focus on? And then the next question is, which products do I plan to trade? And here, I mean, the main focus, and Admirals as a broker offers here CFDs, FX, but also physical stocks. But still, there's also options out there. You could trade futures. Now, the question comes into play, warrants, turbo knockout certificates. So these discussions all the time arise, in fact. And sometimes people come out and say, well, no, I don't want to trade CFDs. I don't think they suit my personality. I want to trade options. I want to trade warrants, for example. That's why I don't open an account with Admirals. It's completely fine. It's a completely fair statement. And if someone thinks he's a good options warrants trader, then this is completely fair. But and okay. But the thing is, sometimes people underestimate the overall product structure and how it affects their mental stability in their trading. So in Germany, for example, or in the European area in general, we all have known about the ESMA regulation and the restriction here in the leverage space, especially when it comes to CFDs, with putting a cap on the leverage there. So the thing now is that people say, I still want my leverage. I want to see something moving in my account, and I want to trade big positions, and therefore I want to use high leverage. And since these products like turbo certificates and all that stuff are not affected by that, I take the leverage. If that's the main reason why you plan to trade them, that's probably also one of the main reasons why you're losing money, lots of money. It's not just because of the leverage, but also let's have a look at warrants or options in general. I think many people underestimate the aspect that these products are directly tied to a price in the future. The asset, the underlying here, has to trade above or below, depending whether you have a call or a put. And it's not just this price which has to be fulfilled to make this bet valuable, respectively, give it value in general, but also it has not just a price component, but also a time component be included. So there's a time in the future where this and that market, the underlying, has to trade above a certain price, let's say, or below a certain price, depending on whether you're betting on a rising or falling market. If that doesn't happen, well, your bet is not going to play out. Why is that noteworthy? Well, what about you and your comfortability, let's say, when it comes to such pressure, which is not just from a price perspective, but also from a time perspective? Do you perform well under these circumstances? Most people I know and I got in contact with, myself included, don't like this, at least not with an amount I'm not comfortable to lose. I mean, that's to some extent self-explaining, but that's something I take into account and I know before I enter the trade. So if your main intention to enter the world of, let's say, derivatives around knockout products, turbos, certificates, and all that stuff, only because of the leverage being offered there, you should be really careful, because having this time and price pressure being put on you can result in you underperforming mentally, which is then also something which makes CFDs, for example, very attractive, because CFDs are continuously priced, which is, by the way, directly affecting, for example, strategies like if you have a pair trading strategy. We had an event earlier where I talked about a Brent and WTI and oil strategy, where you trade these fungible goods against each other. If you have a monthly expiration, as it's usual in the case of oil, for example, that could probably not play out as wished within the strategy. If you have a continuous price product, as you have with CFDs, then this strategy is something you might think of being interesting for you. So that being said, brings us directly here to the question, in fact, who am I? So once you know yourself and you know that you perform well, once there is no such pressure being put on you time and price wise, then you know, okay, probably options are not the market I want to trade. So that's why you have to answer the question, who am I, first? Then, which trading approach do you plan to trade? Also something I mentioned now several times, trading breakouts, news, trends, progressions, regressions, all that, something you have to answer for yourself. Then the time frame based on your personal situation, your living situation in this context, 1 minute, 5 minute, 30 minute, hourly, 4 hours, daily. So it's at least, or especially here, the latter ones, 4 hours and daily. These are the time frames you look at when you're full-time employed, even so probably part-time employed sometimes, while these are the timeframes which are looked at from especially professional traders who trade for a living and who can really follow the price action very, very closely and by directly looking at the charts each day. And then here's the trading logic. Here is the how do I enter the market, how do I exit the market, how big is the position size, and all that, so on and so forth. This is the fifth question in this context. And then the interesting thing is, now after we found all this, which market do I plan to trade, which products do I plan to trade, which time frame do I plan to trade, which strategy do I want to trade, or what does the trading logic look like, then you have to see whether your idea works. So you have to then write it down and manually test it, or write a product, write a code, for example, or let someone write a code here, like an expert advisor. You can then have run through the MetaTrader with the historical data included, and then see whether your idea really results in overall profitable results in the long run. So this is the backtest, what it looks like. And then the next step is, it's not ending there, that you say, okay, cool, the strategy seems to be profitable, let's go open a live account and go ahead. I mean, you're way ahead of the pack if you do it, if you follow these rules, because over 90% of the people don't do that. That's organized, and that's one of the main reasons. This is the main reason why people lose money and not making it in the long run. But it's in fact too early now to start out, because now you have to wonder, okay, the results I get here, do I correspond with these well? And what can I do to probably for example, what can I do to adapt the position size to make it my personality, to let it, my personality to correspond with my character, with my personality better. What do I mean by that? Let's assume you're risking in your back test. Let's say you run a back test and you simulate it here with a 10,000 euro account. You say I risk 1% of my equity per trade, so this is 100 euros. And then you run the backtest and you see that within this backtest, the max drawdown, the capital you lost at one point before then hitting new equity highs, will say 20%. And now assume that 20% is too high for you. You say, well, I'm not comfortable losing 20% and more than that because it's a backtest result. I'm not comfortable losing 20% of my equity trading the markets. That's very important information. That doesn't mean that you shouldn't trade the strategy, especially not if the overall results are positive. But you should take into account that you probably do not have the mental stability as you expect it to, or as you expect yourself to be mentally stable, even if you know that the strategy you are trading here is profitable. Which means you have probably reduced your risk and not risk 1% per trade, but probably 0.5, 0.7% per trade. And these adaptations are then something you have to implement, and then you can take the next step and trade the strategy you thought of based on the answers you gave earlier to the questions above here. So that brings us here to the profitable trading strategy I was referring to at the beginning. And in fact, it's a very simple strategy, but it works. You will see that. So you will see here the results and here the equity curve in a few seconds. In fact, the strategy today runs. Let me just take a quick glance here at gold, how gold is performing. Are we in the green today for gold? It doesn't look so promising. So I think it's plus minus, yeah, something like around 0 right now for the day. Slightly negative, slightly higher today. So what did I look up? Well, the strategy I present to you here is a simple one. It says buy gold every Thursday at the last price, 21.59 London, and then we hold the position one day and sell it one day later, Friday, before we go into the weekend. And we don't put a stop loss. This needs definitely adaptation. So it's just a basic strategy. Even though in high liquidity aspects here comes into play when it comes to gold. So that's not a low float stock or something like that, but still something which needs definitely consideration. And there's no take profit. And so if you now run a back test, you will see that over here. So these are results from earlier. I haven't updated the chart here, but it still looks quite promising now for the last 1.5 years. So this chart you can see here hasn't dramatically changed, but you see, you take every Friday, or yeah, in fact every Friday. So closing price Thursday and then Friday, you take a trade. So it's 888 trades you have here with a hit rate of 57%, a loss rate of 43%. You have a payoff ratio, this average gain to average losing trade of 1.08, so nearly 1.1 to 1, with a hit rate which is above 50%. Max drawdown of the strategy is 18.6%, and as you can see, rise in equity curve. So this is in fact a strategy resulting out of answering the questions from the slide earlier. So which markets do I plan to trade? In this case, I answer this question with commodities. I want to trade commodities. Then you say, okay, I plan to trade it with a CFD. So I mean, you could also trade it with a future, for example, or an ETF. But in our case, due to the scalability in terms of risk, especially, and this is especially true since we are trading here initially when testing the strategy without a stop loss, CFDs should be favored. And then it's in fact it's a fundamentally driven trade. It's very difficult to say. It's not really a news trade, but the idea behind this is that market participants start to hedge their exposure before the weekend, because there's now 2 days of no trading taking place, and well, markets are closed. So you try to hedge your exposure over the weekend, your overall portfolio, which you do with a classic safe haven like gold. And that's one of the main reasons, beside the fact that also here, gold dealers, for example, or people working with gold in this context, like someone making watches or so, they build physical buy physical gold before the weekend to have it already then available early next week so that they can work with that. So that makes sense, and it's like the strategy itself makes sense. And that being said, brings us here to an overall expectation that prices should continue to trade higher into the weekly close and also holding a position over the weekend. And so you could probably also extend this to Monday and close the position there. But all in all, what we can certainly see is that this idea obviously plays out. So it's a fundamentally driven trade. The time frame we trade at here is daily chart. So this is also something people who are fully having a full-time job can easily do, because they enter the trade here at the last print, if you want, of each evening on the Thursday, and close the trade each Friday in the last print. And so that's it. So this is the backtest we run, and then we get the max TD. If you now say 18.6%, this is a little too much, well, then reduction of the position size should be here should be brought into place. So we trade this here with one contract in this context. So this is something which needs adaptation. We have the possibility with micro lots then to scale down the position size, however, and taking it from there. So you have an idea, you go through these points, you have your idea. Wherever you get it from, you test it, you adapt it accordingly to your personal risk preferences, and then trade the strategy. And yeah, so that's it on today's topic and the trading strategy, respectively trading plan. So a trading plan, very important, is not a trading system. It's way more than that. The trading system describes how you will enter and exit trades, how your risk and money management looks like, and it describes in this context here, which logic your trading follows, if you want. A trading plan defines what you have to do, why, when, and how, and goes far beyond your trading logic. It's also in terms of your daily trading routine, as you witnessed several minutes ago and several times in the past already in my case. By the way, let me just check here again. So we dropped 50 so far, so good. So I'm not making it above 52 is definitely something to worry about for the bears. Let's just see now. I'm happy that I'm not that I'm right now here, because I don't want to be positioned within this price discovery phase. So there's very erratic action right now taking place, and the only thing when I really wanted to be positioned in some way would be if we see the squeeze up to 54, which hasn't happened. So now let's see whether we can stabilize below VWAP and then taking it from there. So this is then my next step then in this context. But as I already pointed out, so this is my daily trading routine. So I have my plan ready. I have my key parameters ready. I can work with. I know why I'm interested in this play. I'm here in this context, for example, and this is true for every other aspect in terms of trading and formulating a trading strategy. And here are the 7 questions again you have to answer in terms of your trading strategy bulletin we went through. So which market do you plan to trade? Which products do you plan to trade? Which trading approach do you plan to trade? Which time frame do you plan to trade? What does your trading logic look like? How do your first results in your backtest look like? And what can you draw out of your backtest in terms of conclusions here you can then use to adapt the approach to your personality? So you have to know yourself first. Your overall trading routine is not just following some simple set of rules here and enter and exit the market, but it's more like, who am I? Where do I stand in my life? And how does my life here allows me to trade which product in which way? And so that's, by the way, not right. It's not Monday. So that brings us to the next webinar. I'll be here on Wednesday next week. So Wednesday next week, it's the 14th of July here. And I'll talk about the upcoming Olympics in Japan, in Tokyo, in fact, and we will focus on Japanese Olympic stocks. In fact, are there any good place in the stock market right now? And therefore, I'll provide you some stats around the Summer Olympics in general, but from a trading perspective. The question we want to answer is the Nikkei probably about to rise? Also, what about sponsorship deals? Very interesting topic right now, because as you may have followed, we have here Now, no real fans which are allowed to enter the stadiums due to COVID and all that stuff. And still, I want to present you my top 3 summer Olympic stocks. So 2 p.m. London, 14th of July. Check your inbox for the webinar link if you're already registered. If not, head over to admirals.com, the educations tab, webinars, and there you can register, by the way, for all webinars, not just the webinars together with me here next week on Wednesday, but also the webinar together with Marcus taking place every day in the morning, respectively, also the ones here with Paul. And there where here are the contact details if you have further questions on Admirals as a broker. And here is the risk disclaimer. I'll hope you will read carefully. As a fully regulated broker, Admirals has to provide this information here at the end. And so what shall I say? I wish you all the best. I wish you happy trading. Watch your stops. Talk to you again next week on Wednesday. Don't forget to subscribe to the YouTube channel. Don't forget to set a reminder to not miss any of the videos we are producing here for you. Leave a comment in the chat box below. Leave a thumb up here. I'd appreciate it. And talk to you again next week on Wednesday. I'm sorry. All the best. Happy weekend. Enjoy yourself. Talk to you next week. See you. Bye-bye.